Joining us from Zurich is Ron William. He's the founder and principal market strategist from RW Market Advisory. Someone was telling me just the other day, a guest, that he would go long the VIX, given that we are seeing all of this volatility, Ron. Now, what are the charts telling you?
Well, happy summer greetings from Switzerland, Louis. Nice to be back on the show. Looking at the charts, yeah, I mean, we've popped above the 20% threshold for the first time this year. And in terms of your question about the potential for a long strategy on the VIX, it might be an interesting play into the hot summer months ahead. And from a technical perspective, if we take a step back and look at the pattern that is building up on the VIX, we've actually activated a breakout pattern, a multi-month breakout pattern last seen during a similar period in the summer period of last year, which led to increased volatility during that time as well. So certainly something for investors and traders to keep alert on, increased volatility over the next few months.
Talk to me about what's going on with the historic oil volatility and some of the crude price triggers as well.
Well, I think this is maybe the understated story out there in the market, especially with oil prices selling off recently in recent days, suggesting that there may have been a false breakout on the upside. If we look at the long-term perspective of historical measure of volatility, 30-day volatility on the West Texas crude, what that does suggest is that there is a big divergence, historical divergence in the market with volatility at 10-year extremes. So volatility is basically very low and hasn't been this low for a long time, and this suggests, I mean, from a statistical perspective, potential for upside mean reversion. Keep in mind that on a long-term historical basis, oil volatility can deviate up to +1 standard deviation. That is a normal price spike and move, and certainly one that is overdue if you look at some of the cycle overlays which I just put on the chart.
Ron, thank you very much.